Hello and a very good afternoon. Welcome to HYCM's webinar, Look Ahead Analysis with myself, Giles Cochran. Now, I apologise for the slow start today. I have a problem with my computer. Good afternoon, Shura. Unfortunately, my computer is being repaired at the moment, so I'm having to use a spare computer, and things are a little bit more difficult for me. I don't have access to my normal screen. So, first of all, an apology for the slightly late start. And I hope that we can get on to a good, productive session nevertheless. If you could just let me know if you can hear me okay and see the screen, that would be great, just so I know that it's coming through loud and clear. Thank you, Shura, for yes, Shura, that's great. Thank you very much. Well, that's a bit of reassurance. It's always a little bit nerve-wracking when you're using a different computer to check that the technology works as per usual. So I'm glad that that's all working there. So a very good afternoon to folks. Titus, good to see you. Sunith, great to have you. Salvatore, as always. Rick, Christopher, great to have you today. Chris and Vic, very warm welcome to the FX Week Ahead Analysis. Now, as we get started, just to make sure that as we go through different setups, entries, exits, etc., just to be clear that this is not trading advice. The whole idea of these webinars is you look over someone who has a professional trading background and you go and see how I go about making decisions and organizing myself within the markets and how about go about doing that, so that you can look over my shoulder and pick up some tips and tricks. We will be looking at some scheduled events. There are some important scheduled events for this week. The most important one that's scheduled is the RBNZ rate meeting on Wednesday. So we'll be covering that in a little bit of detail as well. So that's worth just getting our attention to, because that probably provides the best trading opportunity of the week from a scheduled perspective. So we'll look at that. And we're also going to look now at some seasonal patterns. Just to bear in mind that seasonal patterns can be really helpful. They can also be a little bit misleading. So it's just worth reminding ourselves that August is the worst month for the Dow Jones and the S&P 500 since 1987. But obviously the Dow and the S&P have been rising steadily since March, mid-March lows. And that rising is carrying on at the moment on the basis that the US is going to be providing huge amounts of stimulus to the US economy. We see bond yields at such incredible low levels, and that's been supporting the equity markets, just meaning that companies can borrow money more cheaply. It means that companies can keep going and they can keep investing in growth and future earnings. That's the anticipation. So that's why we've seen S&P 500, Dow Jones, NASDAQ in particular, NASDAQ taking out all-time highs. But remember that August tends to be the worst month. So just to bear that in mind, but also remember that obviously we're in a very unusual market situation. This isn't a normal August. This is the August in the middle of a global pandemic, which is showing huge amounts of stimulus from central banks around the world. Nevertheless, it's just worth reminding ourselves of that. Also remind ourselves that August is the worst month for the New Zealand dollar and the Australian dollar, and has seen a fall in all but one of the last 9 years for the Australian dollar. If you just take a look here at the Australian dollar, this is the 10-year trailing average. See, 10-year trailing average is minus 1.29, and you can see the amount of falls that there have been in August for the Australian dollar over the last 9-10 years. So that's really one to be really aware of and really focused in on for the Australian dollar. Now we'll cover that a little bit in a moment, what's been causing the Australian dollar to fall. But what will be very interesting is if we see any more US dollar strength, a strong US dollar strength. If we see a correction in that more recent US dollar weakness, then we are likely to see some Australian dollar, US dollar downside. So one key story that we have to be keyed into is this idea that the US dollar is overstretched. Okay, we want to just have a look at the US dollar now in some detail in order to understand what this means. Now, according to Morgan Stanley, they're saying that the US dollar is the most oversold it has been in the last 40 years, and that many analysts are expecting some kind of mean reversion, some kind of a retracement at the moment with the US dollar. Now, a couple of things to say. The first thing to say is that just because something's oversold, it doesn't mean that it can't go on being oversold, okay? So that's the first thing to be aware of. Just because the market is moving in one particular direction in a strong way, it doesn't mean that it can't keep doing that. So if we just take a look at the US dollar, you can see here in the last 1, 2, 3, 4 weeks, the last 4 weeks of trading in particular on the weekly chart, we've seen this very strong, sharp falls in the US dollar. Now that's been for a number of reasons. First of all, we've had that US economic stimulus bill that keeps getting delayed. It's currently still delayed. We'll go on to it in a moment to find out what's happened with President Trump. But that kind of delay has been really, really dragging on the US dollar to the downside. Number two, rising COVID-19 cases. Nearly 1 in 4, 25% of all global COVID-19 cases are recorded in America. So those recorded cases are from America. That's been another reason for US dollar weakness. We've also seen, do you notice here, a good learning point for folks? You see here in March 2019, so in March 2020, we saw this strong rise in the US dollar from about 95 up to around 103. Now that huge rise in the US dollar was at the height of the COVID-19 crisis, when equity markets were plummeting their lowest. Now the reason for that is very straightforward. The US dollar is the world's most widely traded currency. Around 70%, in fact, of all US dollar, of all transactions in the world involve the US dollar. The US dollar is also the most liquid currency. It's the currency of choice. So some very small countries, in order to avoid strong fluctuations in their own currency, say they had a currency that would be prone to fluctuations of 10, 15, 20%, they choose to use the US dollar sometimes instead of their own currency. And the US dollar is a great currency for international trade because it tends to hold its value. It's a stable currency, and it's one that many investors want and choose. Some poorer countries also have their debt denominated in US dollars. So all of that means that in the heart of a crisis, which currency do you want to hold? The answer is the US dollar. So that's why we saw the US dollar strongly bought up in the heart of the financial crisis. We also saw swap lines being extended out to major central banks. In other words, the Federal Reserve was making sure that all the major central banks around the world, if they wanted to get hold of dollars, they could get them in a bid to stop this huge rise in the US dollar. Secondly, the second thing to note is that the Fed then started a huge unlimited quantitative easing program, which was always going to weaken the US dollar. So we've been slowly seeing, as the markets have calmed and as a more predictable path for the recovery from the virus comes into view, that US dollar safe haven status has been able to pull back. That's why we've seen that US dollar just moving down. Okay, now all in all, that's led to some very strong dollar selling. Right. But as we know, markets don't move in straight lines. And so what Morgan Stanley is saying is that the US dollar is now oversold and is due a correction. Now, if you just take a look on Friday from last week, on Friday and last week, we had some very good jobs data. And we've also had a move over the weekend by President Trump in which he signed 4 executive orders to provide some economic relief from COVID-19 to the US people without the Republicans and the Democrats having to pass a bill. Congress have been meeting and the Democrats and the Republicans have been disagreeing. They couldn't decide on the size of the bill. It's been a difficult time for the progress of that bill. And as a result, President Trump intervened and sign these executive orders. And that's another reason why we're seeing some US dollar strength on the relief that President Trump is acting on that basis. So that's why we're seeing some dollar support in today's session. Now, that dollar support should remain as long as that current mood is the same. So we are expecting US dollar support, and we would still expect buyers when it retracements back down lower. First target will be up to this 93.76 level. Ultimate target just underneath that 94 level. Got the ADR high for the day just coming in at 93.90, 94 region would be an ultimate target for day traders. That's the ADR high for the day. Now, this dollar strength, okay, this dollar strength has resulted in some Euro-US dollar downside. Now, if you just take a look at the Euro-US dollar, you can see just marked here on the chart, on this 1.1800 level, there was a huge option expiry level. I'm just going to show you that here. This is, I'm going to show you the Euro-US dollar currency pair, and I'm going to show you the option expiry levels on this pair, Euro-US dollar. So you can see how that's been influencing the Euro-US dollar pair today. This was I've been covering forexlive.com today, and I was flagging this up this morning so that traders could be aware of this very large option expiry level at the 1.1800 level. You see here, at 1.1800 level, it has a 2.9 billion volume of expiries. That's $2.9 billion worth of option expiries at that level. Now, if you just take a look at the option expiries here, you can see that the huge bias is to the call side, to the buy side. So at this 1.1800 level, there was $3 million worth of options. Now, the way these option expiry levels work, there's not an exact science to them, okay? But the way to use them is like support and resistance levels. So you're looking at the kind of price action around these levels. So today, for instance, you can see that 1.1800 level, see that price touched it and rejected it strongly, and then sold off heavily into the near-term support, that 1.1750 level. Now we can see price has broken through that level, and we would expect to find sellers at this level looking for a move back down towards that 1.170 level, 1.1715. So that's what we'd be expecting from this position here because of the US dollar strength. Now I'll show you another little tip that's helpful. If you look at the Euro-US dollar pair, and if you compare, if you put on top of the Euro-US dollar, you put the dollar index, what you'll see, the dollar index is the blue line. As the dollar index goes up, blue line, the Euro-US dollar pair goes down. So as the dollar index goes up, Euro-US dollar goes down. As the Euro-US dollar pair goes up, the dollar index goes down. They are negatively correlated. And because of the way the dollar index is made up, there is a disproportionate weighting to the euro. That is why we see this strange relationship. So you can see here, as the dollar index is pointing up, possibly due a retracement, then we would expect to see the Euro-US dollar moving to the downside. That's why we've seen the reactions that we have today. 1.18 level just pushing down. You can see dollar index at the moment is just falling back a little bit down on this on the smaller charts, 30 minutes. But if we get an uptick back in the dollar index, we'd expect more downside in the euro US dollar pair going forward. So that's just a key relationship to get straight in your heads as we go into the next session. Now, looking ahead to what we have in the week, we'll go to the main calendar. Now, let's have a look. The calendar is very quiet today. There was some low tier data out of Switzerland and Europe in the morning of no significance at all, or very, very little significance rather, I should say. There is some job opening for the US, but again, there's no top tier data out today. So today we need to look out for any sentiment shifts any bad news between US and China, that can sour risk sentiment. If we had any bad virus news, any news on Brexit, they're the sort of headlines we're looking out for today, particularly when we don't really have very much in terms of the most scheduled data points. Tomorrow, again, another quiet day, although we do have some earnings data out for the pound. However, I would anticipate this data being quite good. Now, at the moment, the UK furlough scheme is still in place. It means the government is artificially propping up companies so that they don't have to make their staff redundant. So this has meant that, you know, unemployment levels have remained relatively low in the UK, and average earnings have been able to remain relatively high in the UK during COVID-19. And that's all because of the UK furlough scheme. So we can see there is a little bit of a dip here in the average earnings, but still, you know, just hovering around the positive territory. So it will be interesting for the pound. For those of you who've been following me on forexlive.com, you notice that I've been talking, and you may have noticed yourself, the pound has been quite strong over the last few weeks, and that pound strength has just gone, you know, in spite of some fundamentals. So just be aware that even if we get a disappointing reading for the pound, be aware that the market has a predisposition at the moment to be positive for the pound. I think some of that is to do with the fact that there's going to be no Brexit news really out now, probably until September. The summer in the UK, it's a recess for the UK Houses of Parliament. So there isn't any political business particularly being done. So we would expect to have a little bit of a quieter session now as a result. Got some data out of the euro, not necessarily particularly strong data, but it can have an impact on sentiment, so worth being aware of on Tuesday. Germany, of course, is the largest country in the Eurozone, so German data has a disproportionate effect on the euro than other countries, European countries' data points, so be aware of that. The main event for the week, of course, is this RBNZ monetary policy statement. Now, the country of New Zealand has been doing reasonably well recently. It's managed to keep the COVID-19 cases to an absolute minimum. So some of the jobs numbers are back to pre-virus levels. So some data points have been quite good for New Zealand, and you can see recently that the unemployment rate was expected to be 5.8% last week, 4th of August, but was actually 4%. So that was a lower level of unemployment than was expected. So that's a good result. We also saw that jobs growth was expected to be down 2%, was actually only down minus 0.4%. So a better than expected reading. We also saw that the exports was at 5.7 billion, and in mid-July we saw that the inflation data has stayed pretty steady around that 1.5% anticipated level. So taking as a whole, falling COVID-19 cases, slightly better than expected unemployment rate, jobs growth, not as bad as feared. That means that there is a potential for the RBNZ, when they meet on Wednesday, to be more optimistic, except there is a problem. And the problem the RBNZ has is this. Just take a look here at the New Zealand US dollar. Okay. Now, taking a look here at the New Zealand US dollar, you will see that in the last, since March, we've had the New Zealand dollar rise around 20%. This strength in the New Zealand dollar makes it very difficult for exporters. So exporters within New Zealand are being penalised because of the strength of the New Zealand dollar. So when it comes to Wednesday, Governor Lowe, not Governor Lowe, sorry, Governor Orr, who's the governor of the New Zealand Central Bank, will not want to paint too rosy a picture, because if he does, it could easily boost the New Zealand dollar, which makes it harder for exporters. And also remember that for the RBNZ, although employment levels have been a bit better, tourist levels are going to be hit very badly in New Zealand. So that will hit employment levels in the tourism industry in New Zealand. So there are distinct reasons why Governor Orr won't want to necessarily, say that New Zealand is doing fantastic. So look out as well to do with what they do with their bond purchases. Now, their bond purchases are due to run out in September. So we need to see if they extend bond purchase either in length of time or size. So look out for the size of bond purchases to be potentially increased. If the bond purchases are increased and the amount of bonds are increased, then that will be a more dovish picture and it will weigh on the New Zealand dollar. If Governor Orr says nothing, nothing about New Zealand dollar strength and is relatively optimistic, then expect New Zealand dollar strength. And one currency pair to potentially play that against is the Australian New Zealand dollar. So the Australian dollar New Zealand currency pair can be used to play the RBNZ interest rate decision. So look at the time, when we get nearer the time, look at the actual decision and see whether it's dovish or bullish for the New Zealand dollar, and then we can pair that up with the Australian dollar. Now, the reason it's good to pair that up with the Australian dollar is that both the Australian dollar and the New Zealand dollar are impacted in a similar way with US-China trade negotiations. US and China are meeting on 15th of August. They're meeting this week to discuss phase one trade deal. Now, we all know China hasn't been able to deliver on the phase one trade deal because of the coronavirus. So the tone that US-China trade talks take is going to be very, very important. And as a result, trading an Australian dollar, New Zealand dollar currency pair would make sense given the fact that there's US-China discussions, we're heading into them and they're about to happen. So key event, main event of the week is this RBNZ monetary policy statement. Don't forget, tune in to a workshop that I run on Wednesday, be covering that decision in more detail. And also don't forget to follow me on Twitter, Giles Cochran CCA, and on HYCM's various channels. I'll be keeping folks updated on that decision. Now we have the preliminary GDP data that's coming out on Wednesday, August the 12th at 7 a.m. So we will be that will be important for the pound. Just taking a look at the data here for the GDP, quite a large fall of -20. So this huge levels that is potentially heading for the UK. That has potential to impact the pound, so don't forget to look at that. If it's not as bad as expected, that will be very positive for the pound. So just looking in terms of expectations, I'll just get rid of New Zealand and let's just look at the UK data point. You can see here that hang on, let me just get this right. August, we want August. There we go. Okay, so the GDP estimate, third quarter estimate is minus 18.5%. Okay, this is on the Icon Zenith data platform. Now, if it's minus 20%, that would be negative for the pound. If it's above minus 15.8%, that'll be positive for the pound. So that'll be not as bad as expected. So anything above minus 15.8% will be bullish for the pound. Anything below that minus 20.4% will be negative for the pound. So do keep an eye carefully on that GDP data coming out on the Thursday. Let's just go back to the correction on the Wednesday. CPI data out for the US, not particularly in focus at the moment, not expecting any data points, but it'll be an interesting one for the Australian dollar, particularly if we're trading the Aussie New Zealand dollar. Employment data, key focus for the Reserve Bank of Australia and Governor Lowe. So if we get decent employment figures here, if we get more full-time work, people in jobs, that will be positive for the Australian dollar. Obviously, if there's a bad employment data, if we get, people full-time jobs falling, that will be negative for the Aussie dollar. Don't forget, Australian dollar very negative has been in the month of August. So if we see that US dollar strength continuing, it's worth just having a look at the Australian New Zealand dollar. We'll just have a quick look at that. Now we'll have a look. At. Let's get the right chart. Here we go. This will be the one. That's the New Zealand US dollar. So have a look at the Aussie US dollar here. Right. So just have a look here on the daily chart. Okay. What's the sort of key area we want to be looking at is this trend line here. Okay. If you get a break and a close below this trend line on the daily chart, and we get poor employment data on that Thursday, then we'd expect more downside, down towards that 0.050 level here, just those highs there going back from June. So any break and close above that level, we expect to move down. So keep a careful eye on that going into the employment data on Thursday for the Australian dollar. We also have Governor Lowe speaking on Friday. Again, that will be important in terms of direction and a steer. And we finally have retail sales out for the US. Important data for the US consumer makes up 70% of all of Australia, of all of the US's GDP. So where the consumer leads, the rest of the US economy follows. That will be an important data point for the US dollar on Friday. Obviously keep your eyes and ears out for that one just as we head into the weekend. Okay, everybody, thank you very much. Oh yeah, my Twitter address is Giles Coughlin CCA. I'll just there we go. That's great. Okay, everybody, thank you very much for being here. And don't forget that the major data point to be looking out for is that RBNZ decision on Wednesday. That will be important for the New Zealand dollar. And I hope you all have a very good afternoon. Thank you very much, one and all. And I look forward to being with some of you on the Wednesday. Yeah, thank you, Amit. You're welcome. Thanks now, guys. Goodbye.